How liquid are the markets on Uphold? It's a question you need to ask if you're serious about trading. Liquidity is the lifeblood of any exchange, determining how easily you can buy or sell an asset without impacting its price. It's all about having enough buyers and sellers in the market to ensure smooth transactions. On Uphold, the picture is a bit unique. Unlike a traditional exchange with a public order book that shows every bid and ask, Uphold operates with a different model. They source their liquidity from a network of over 30 different exchanges and liquidity providers. This anything-to-anything trading engine is designed to find the best available price for you across all of those sources. So, instead of seeing a visible order book, you're getting a guaranteed price when you execute a trade. This model is great for a lot of users, especially those who prioritize simplicity and direct conversions between different assets, whether it's crypto, fiat, or even precious metals. It means you don't have to worry about slippage from large orders hitting a thin order book. However, the lack of a transparent, public order book can be a double-edged sword for more advanced traders who rely on that data to gauge market depth and sentiment. They can't see the full stack of buy and sell orders at different price levels. For them, it can feel like trading in a black box. Ultimately, Uphold's liquidity is a function of its vast network of liquidity providers. The platform size and partnerships mean there's generally enough volume to execute trades efficiently. But for those who demand the granular, real-time data of a traditional order book, the Uphold experience is a different one. It's a trade-off between simplicity and transparency.